Hey guys, how are you? Hope you are enjoying your weekend. So let's make a little weekend video here. I'm going to be talking a lot about trading mindset, trading psychology, that type of stuff, all right? By no means am I a master trader or a master trader psychologist. This is basically just for educational purposes. And if you can take some value out of this video, then that's great. So let's get right into it. The first thing I have in my list here, so I wrote in this notepad, I wrote the mindset required to think like a trader. So number one, I put comfortable with uncertainty, being comfortable with the idea of uncertainty. Let me read you a passage from the book Trading in the Zone by Mark Douglas. Very interesting passage. If there is a such thing as a secret to the nature of trading, this is it. At the very core of one's ability, number one, is to trade without fear or overconfidence. Number two is to perceive what the market is offering from its perspective. That's big. Number three is to stay completely focused in the now moment opportunity flow. And then number four is to enter the zone, which is a strong, virtually unshakable belief in an uncertain outcome with an edge in your favor. So this is very powerful words from Mark Douglas, and I strongly recommend you read this book, Trading in the Zone, just for your own educational purposes. So the best traders have evolved to the point where they believe without a shred of doubt or internal conflict that anything can happen. They don't just suspect that anything can happen or give lip service to that idea. Their belief in uncertainty is so powerful that it actually prevents their minds from associating the now moment, situation, and circumstance with the outcomes of their most recent trades. So, talking a bit deeper on the idea of uncertainty. Look, if you are used to the idea of having a regular job, a 9-to-5 job, that is certainty. If you have lived in certainty your entire life that everything is going to be okay, that you are always going to have food on the table, then you are not used to the idea of uncertainty. From my own perspective, I am grateful that I have experience in the uncertainty world, all right? I spent a lot of years street performing the last few years here in my hometown. And when you're street performing, you're essentially relying on people to tip you, right? So there's no certain income that you're going to make. So all you can do is essentially do your best, and whatever you get, right? You're not expecting anything because, again, managing expectations. Because if you base your outcome off of previous outcomes, you're setting yourself up for disappointment, right? So that goes to the topic of managing expectations. But relating to uncertainty, I mean, look, if you're used to being self-employed, if you're used to not having a stable income, that is actually a plus for you for being a trader, because in trading, obviously, there's no certain income, right? So there you go, uncertainty. Number two, patience. This is very important, okay? Again, I'll give my own example. I'm a piano tuner, right? To tune a piano, there's more than 200 strings, and you need to perform a repeated process over and over again on every single one of these strings and perfecting it. To tune a piano requires patience. To give somebody a music lesson requires patience, depending on the student and their level and everything, right? Being a trader requires patience, because a lot of times you might take a trade and the trade might not follow through immediately. The market flow might still be suggesting that your trade is valid. Like, I can give the example of this week, there was a trade on, I believe it was Wednesday, where we had that bull trend day. And the trade didn't follow through until the end of the day. And by that time, I was out of the trade, because I do have a strict regulation that I get out of trades afternoon, because I'm not an afternoon trader, right? Patience is absolutely crucial in trading, and being able to sit there sometimes and just literally understand the opportunity flow of the market and wait for the opportunities to come your way and be able to act on them when they appear, all right? But when they're not there, you're also able to realize that there is no opportunity and that you should just be sitting on your hands and being patient and waiting for it, right? So patience is definitely a crucial aspect to being a good trader. If you're not patient, you're not going to experience much success, because you will often find yourself looking too hard for opportunities when you can just literally sit there and wait for them to appear. Number three is a couple of points here. I wrote creativity, adaptation within a mechanical framework. All right. So trading is a game of understanding opportunity flow. All right. Now, when it comes to understanding opportunity flow, you need to be obviously in the state of mind required to understand that opportunity flow. But you also need to be able to understand the market's information and the market's flow itself, which is related to the technical side of trading, which is understanding charts and understanding the tape and stuff, right? So when it comes to creating strategies and understanding your strategies, you need to understanding or creating them from a point where you're always tweaking them. You're always looking to improve the strategy if it requires improvement or a slight tweak based on the market condition, all right? So that's why I think creativity is an important aspect to trading. If you're a person who's looking for that perfect strategy that is just there and it's going to work no matter what, I'm afraid you're going to be very disappointed because that doesn't exist in trading. Being creative is beneficial to you. Now, there is a danger with creativity because being too creative can also be negative, right? Because being creative implies a canvas, a blank canvas, and you can throw whatever you want on the blank canvas, right? You don't want to be that aggressive in trading because obviously we need to have a framework that we work off of, and the creativity point is only there for when you need to change the framework and adapt the model, essentially, right? So being aware that creativity is important for trading, but is not the most crucial aspect, in my opinion. So that's why you need to balance your creativity. You need to offset that creativity with a mechanical framework, right? So you can be creative in your development of the strategies, but when it comes to putting them in practice, they need to be put into a mechanical framework, right? Like protecting trades on a regular basis and all that stuff. All the stuff that requires you to be mechanical in trading is not related to creativity. Creativity and adaptation, though, are very important for trading in the long term. All right. There is no strategies that's just going to work all the time and you could just put on the trade and it's always going to work. It doesn't exist. I'm sorry. So if you're looking for that strategy, you're looking in the wrong place. All right, guys. Number 3 is the ability to self-assess, to self-analyze on a consistent basis. All right. So this is big. Trading requires you to be in the now moment opportunity flow. All right. And in order to be in that now moment opportunity flow, you need to be in a balance with your environment and with yourself. And this is why a lot of people find it hard, because what they do is they bring their real life experiences into the market, basically. So they're approaching the market from a standpoint where they're saying, I want to make this amount of money today, or I'm just this close to having that dollar amount to buy the thing I want, and I'm just going to go in today and go balls deep and you know what I'm saying? It's just an unhealthy approach, unfortunately, because when you approach the market from a point where you're expecting something out of it, or when you're allowing a psychological game to affect your decision-making process, you're setting yourself up to be disappointed because you're taking yourself out of that now moment opportunity flow where you're perceiving the market's information that it's giving you. If you're approaching the market from that perspective, you're not going to be able to perceive what the market is actually telling you, how much profit potential there actually is available in the market based on the probabilities that the market is showing right now, okay? Number 4, what I just said, the ability to perceive and understand market information objectively and unbiased, right? So there's the technical side of learning how to understand market information, learning how to read the tape, learning how to understand trends in the market, of course. But there is the psychological aspect of approaching the market from an unbiased perspective. Now, this is obviously relative to a strategy that you trade, the time frame you trade, but I'll give an example. So in the mornings when I get up and I get ready to trade, when the market opens, I am not going to be thinking, okay, I'm looking bearish, or okay, I'm looking bullish, you know? Unless there's extreme amount of clarity in one direction, that might give me a slight lean, but generally, I want the tape to show me, I want the chart to show me which direction to trade, all right? And that's why I will always approach the market from an unbiased perspective when I show up to trade in the morning. And I think this is extremely powerful, and I might explore this deeper as I go on here, guys. So just a quick note, look, I've only been trading for just under 2 years, and I haven't had monetary success, but I do believe that trading is a game of personal development. And if you're trying to approach trading from a standpoint where you're trying to find that perfect strategy to trade that's going to make you money, that's not the way to do it. The way to do it is by mastering yourself and learning how to approach these markets on a regular basis, right? Learning what the herd is thinking and learning how to go above that and kind of be in that market's opportunity flow, right? Are you with me here? Another point I have is truly being able to understand market in terms of probabilities. So actually developing a probabilistic mindset. So there's plenty of videos on Mark Douglas talking about probabilities and stuff. So I suggest you go watch them. But it's basically understanding what the actual probability of something happening is, right? So you look at a chart and you say, okay, it's more likely that it goes up than it goes down, right? That's an edge that you can identify. If you were to put it in a probability perspective, how would you say it? Would it be 50-50? Would it be 70-30? So when you look at a chart, for example, the market pulls back to the moving average in a bull trend, you want to be looking at that and you can make the example and say, okay, in a bull trend, market pulls back to the moving average. It is at least a 60% chance that if I buy here, the market's going to give me some money. So that's an example of a probabilistic analysis of a price move. So try and adapt this mentality to your trading, understanding probabilities of the market, all right? So probabilities relating to price moves and also probabilities based on what the market is implying, the VIX basically. And number two is actually learning how these patterns react in a real-time basis. And that's where, like the example I gave about the pulling back to the moving average, that's a probability analysis that you can make yourself. So there's the probabilities that you can make yourself and there's the probabilities that the options market implies. And if the two don't agree, that's where you can decide to make a trade or not. You see, I just wrote in here, news is largely noise and does not benefit your trading most of the time. That's relative, of course. Now, news does not benefit my trading. All right, the last thing I want to talk about in this video is trading in my own environment. So trading needs to be in a place of relaxation and balance in my daily routine. And there's no way simpler than to say it like that. So look, when I approach the market in the morning, I'm not going in from a stressful perspective. I'm not saying, oh my God, I need to make $1,000 today. I need to make money. I want to lose money. I'm going to make money, blah, blah, blah. I'm not thinking about that at all. You need to approach the market from a way that you feel balanced and relaxed, and you are in the flow of the opportunities being presented to you. And again, I'm still deeply trying to explore this idea here, but that's basically it. You need to find an equilibrium in your surroundings. I'll give the example. Look, I'm 25. I live alone. I don't have a girlfriend. I don't have kids. My parents live not far from here. I have a relatively stress-free life. Therefore, it gives me the window to be able to approach the markets from a clear-minded standpoint, right? Now, if I had kids, if I had a girlfriend, if I had a bunch of stuff going on in my life, if I had debt and all that stuff, I would probably not be able to trade at all. I would be self-destructive when I approach the markets because all the stuff in my life, whether you think about it or allow yourself to think about it or not when you're trading, it's in you and you are always at risk of allowing those things to affect your trading, right? So you're going to go in today thinking, oh man, my wife really wanted that new Gucci bag. Let me just buy this option and get in, and you're making these irrational decisions that are unrelated to the opportunity flow of the market, and that's where you mess up. So that's why your surroundings have to be absolutely clear. Your surroundings have to be in balance with yourself and with your goals, right? So if your surroundings are creating an environment for you that is stressful, then you should not be approaching the market at all. Because you're going to, without you even knowing, you're going to approach the market from a standpoint that you're going to be looking for more opportunity than there actually is, right? So you're going to be sizing up at the wrong times. You're going to be not trading at the wrong times. You know what I mean? You're just going to be not in the flow, you see? So that's pretty much it, guys. So trading for me needs to be in a place of relaxation and balance in your daily routine. You need to like trading. I like trading. I find it very fun. I find it intriguing. I find that it's an aspect of personal development that almost nothing else can help you achieve that level of personal development. So that's pretty much it. Yeah. I don't know what else to say here. Take a deep breath, man. Take a deep breath. Look, if you're approaching the markets and you're stressed about needing to make money, or you're stressed about your life and about something that's happening, and you're trying to approach the markets and trying to trade, look, you're not going to be in a profitable environment for yourself. You're not going to be flowing with the market because you're creating these opportunities in your head that are not actually in front of you. So anything around you in your life that is affecting you from a stressful or negative standpoint or an unbalanced environment will negatively impact your trading. That's it. So that's pretty much all I want to talk about today, guys. So I wish you a great weekend. I hope you enjoyed these videos. I hope you can take some value out of them. Again, I'm not a psychology master or a trading master, but these are just some aspects that I think that traders need to understand and people need to understand when approaching the markets. Take care and enjoy yourselves. Bye.